Hello, I am Vadani Arya. This video is about a lecture for the complete guide to bookkeeping for small businesses. This lecture is about how to do bookkeeping for a small business, analyzing financial transactions. The accounting process starts with analyzing financial transactions and entering the business entity into the accounting system. For example, loans taken for personal reasons does not include in the business documents. The first step of the accounting process involves the preparation of source documents. Source or business document serves as the foundation for recording the transactions. Journal entries. Business transactions are recorded in a journal, also known as books of original entry, in an order using the double entry bookkeeping system. The journal entries include two accounts, debit and credit. To simplify this process, accountants use a particular journal to record recurring transactions such as purchases, sales, cash receipts, etc. These transactions cannot include in the special journals registered in the Green General Journal. Ledger. The ledger is a collection of accounts that display the changes made to each statement based on past transactions and the current balances in each performance. It is also known as the books of final entry. How to make a ledger account? The ledger is the official record of the company's accounts, and sometimes we refer to the general ledger, purchase ledger, sales ledger, and cash book. Ledger provides all accounting transactions entries and gives a balance for a specific period or a particular period. At the end of the period, ledgers serve as a source of data building for financial statements for a period. Therefore, accounting means master record all the company's financial affairs. A ledger account contains a record of business transactions. A separate file within the general ledger assigns a specific asset, liability, equity item, revenue, or expense type. Examples of ledger accounts are cash, accounts receivable, accounts payable, accrued expenses, debt, salaries and wages, office expenses, depreciation, office administration, cost of goods sold, revenue. Information is stored in a ledger account with the ending and starting balances for a period and adjusted with debits and credits. Identify individual transactions within the ledger account with a transaction number or other representation to research why they entered a deal into a ledger account. Transactions caused by regular business activity, such as billing customers or recording supplier invoices, may involve adjusting entries, which call for journal entries. The information in a ledger account summarizes into the account level tools shown in the trial balance report, which uses to compile the financial statements. The ledger account may take the form of an electronic record using an accounting software package or a page written in a written ledger if you write accounting records by hand. The general ledger is also called a nominal ledger. For example, post from the sales day book to the sales ledger, debiting the personal account in the sales ledger and crediting the sales account in the nominal ledger. Then the other postings from the purchase day ledger are done the same way mentioned in the sales day book. Unadjusted trial balance. A trial balance is prepared to test if the total debits equal to total credits. The accounts are extracted from the ledger, are arranged in a report. The proportions of the debit and credit columns should tally. If not, the trial balance contains errors that must be located and rectified with the correcting entries. It is important to note the same error. Some errors may exist. Despite debits equaling credits, such as errors caused by double posting or omission of entries, missing some entries. Adjusting entries at the end of the accounting period, the accountant must prepare the adjusting entries to update the accounts, summaries in the financial statements. For example, income earned but not recorded in the books. Adjusting entries are made for accrual of income and expenses, depreciation, allowances, deferrals, and prepayments. Adjusted trial balance. Preparation of adjusted trial balance takes place after adjusting these entries. Do this to test the debits match the credits after adjusting the entries. It is the final step before preparing the business's financial statements. Financial statements. The financial statements, which include the income statement, statement of changes in equity, balance sheet, statement of cash flow, and notes, are the end products of the accounting system. Closing entries. To prepare the system for the subsequent accounting, temporary accounts that are mastered periodically, including the income, expense, and withdrawal accounts, are closed. The balance sheet accounts, also called the permanent reports, remain open for the next accounting cycle. The last step of the accounting cycle is to prepare a post-closing trial balance to test the debits, equality, and the credit amounts after making the closing entries. This trial balance contains real accounts only, as the temporary accounts are closed during this accounting cycle. Now, how do I set up a small business accounting system? First, open a business bank account. When you start a business, open a separate bank account to keep your business finances different from yours, personal ones. Choosing an accounting method. When setting up small business accounting system, you need to choose a method, either of recording financial transfers. That should be either the cash method or the accrual accounting basis. Cash basis. Under the cash basis method of accounting, you record income and expenses when making cash transactions. For example, you record revenue when you sell a product, only when the customer pays you for the product. Accrual basis, while cash basis may be easier to use, most businesses use accrual accounting to record transactions. Under this method, records income when you make a sale and expenses when you incur them. Whether you received or paid cash for the product or service is irrespective of whether you received or spent money. You must use the double entry accounting system under record 2 entries for every transactions. I think the people feel accrual basis has more control over cash basis accounting system. Recording transactions. As a small business owner, you have the option of hiring an accountant. That's up to you. Recording transactions by hand or using accounting software to register your business transactions. Compile a chart of accounts. The chart of accounts lists all business transactions, compile statements, reviews progress, and locates transactions. These charts have to be updated often to include various business transactions. Determine your payment terms. That depends on your business. Based on the nature of your business, you might decide to offer credit to customers instead of collecting payments at the point of sale. You may choose to invoice them later. If you decide to extend credit to customers, you will need consistent creating and sending invoice. If not, you will face problems with cash flow and loss of working capital as well. You will not enough working capital you will face. That's a big problem in running a business. So you have to be careful and send out the invoices immediately and collect the money also immediately, as soon as possible. I hope you like this and understood the concept of this lecture. I liked it also. Thank you very much for watching my video. Thank you. Bye for now. Talk soon. See you in the next lecture. Thank you.